morning, everyone. Let's start learning from the mythology of Star Trek. Because what better way to learn about technology, exploration, society, better than Star Trek? So picture this. Humanity is almost wiped out in the 21st century by World War III. The bustling commerce, aging infrastructure, complex financial systems are annihilated. However, from the ashes of nuclear destruction and collapse, the first warp drive is created. This engine allows spacecraft to manipulate space and time so that it can go faster than the speed of light. Humanity's ability to break this barrier attracts a race called the Vulcans, who help humanity take their first steps into a wider galaxy, teaming up with alien species. In this next century, humans and our new Vulcan friends form the United Federation of Planets. Perhaps this is the kind of spirit of exploration that we need at this time as we come out of this pandemic. So today we're going to explore the future in blockchain. We are going to look at the last year in blockchain and crypto, and then we're going to look at the next year in the future and see what trends will continue. And then towards the end, we will also talk about, as we inch out of this pandemic, what the world's future might look like and what the role of blockchain might be in it. As we look back upon a tumultuous year, geopolitically, business-wise, and individually, crypto and blockchain industry finds itself at an inflection point. The global pandemic made us question our core tenets about how the world works, from supply chain infrastructure to monetary policy to even our personal values, all of which have implications for crypto and blockchain. Some experts argue that we are about to enter a deflationary period in the United States. 1 million layoffs globally have hammered consumer demand. So let's look at the winds of change flowing within 3 areas of blockchain and crypto. First, investment. Looking at blockchain investment and crypto investment, both in VC startup funding and in enterprises, 2019 funding for blockchain companies fell while deal activity relatively remained steady. Total deals for the year were down 2% year on year in 2019, but the funding dollar fell over 30% as the deal size shrank. Funding to cryptocurrency companies has dwarfed funding to enterprise blockchain. That tells you something. On the other hand, Deloitte's blockchain survey reports that blockchain still remains an active and strategic priority for enterprises. Here's another trend. The nexus of blockchain activity is shifting from the West to the East. 4 years ago, 51% of deals were for US-based companies, while only 2% went to China-based companies. In 2019, US share of deals fell to 31% and China rose to 22%. This trend can also be seen in blockchain patents. Chinese tech companies have been traditionally isolated within China, even though they have grown in total size. Blockchain may be the turning point for the global ambition of China-based companies. A notable development is the IPO of the Ant Group. Ant, as you know, is the financial spin-off of Alibaba, which seeks to become the biggest initial public offering, IPO, in history as it raises $30 billion at a valuation of north of $200 billion. Their stated focus on blockchain technology makes us look forward to an exciting innovation coming out from them. Okay, now let's talk about blockchain adoption trends. Speaking of enterprise blockchain, we went through this trough of disillusionment in early 2018 and through 2019. Indicators seem to point that we are coming out of it now, signs of a maturing industry. Attitudes on blockchain are shifting, where enterprises now believe that there is a compelling business case that blockchain can scale and it can be a source of competitive advantage. The shift can also be attributed to an increased number of projects coming into production in 2019 and 20. In the crypto space, 2 areas stand out: digital assets and decentralized finance. I believe we are moving from an era of fintech, transfer of money on the internet, to the era of decentralized finance, transfer of value, on the blockchain networks. For me, tokenized assets and digital assets are the instrument to make that happen. And that have been the shining star in this niche in the past year. Digital assets are emerging as a new alternative class, even for institutional investment. And I believe that trend will accelerate in the next year to come. So how does earning interest on your crypto holdings sound? Well, blockchain companies are incentivizing investors to lend their crypto with interest payments. And this opportunity to earn crypto interest has attracted investors to DeFi platforms. Decentralized finance platforms are creating traditional financial instruments based on crypto and decentralized network. So here's a question to ponder. Crypto was once thought to be a hedge to inflation. But if we are entering a period of significant deflation, how will that impact crypto's value proposition? Let's talk about digital currencies. I believe the architecture of money is changing. Libra's announcement launched an arms race for private companies, consortiums, and governments developing currencies. The race to establish the stable digital currency for digital commerce on the internet remains on. After the initial shock and skepticism, central banks and sovereign governments globally are now responding aggressively. Initiative may come from central banks rather than startups in this case. Take a look at the number of central bank projects developing currencies beyond traditional markets. From the United States in an exploratory phase to China, to France, Saudi Arabia, and Sweden. Although skepticism remains high here in the United States, and rightly so, consumer privacy, security, and monetary policy need to be addressed adequately before central bank digital currencies can become a reality in the world that we live in. So, what did this pandemic show us? It shows that the supply chains were disrupted. Our aging infrastructure, broken and siloed business processes were not adequate. With accelerated digitization that the pandemic brought on, blockchain can help leapfrog us into a more streamlined infrastructure and more streamlined and resilient supply chains. It also shows us the exogenous geopolitical risk, global shutdowns, China-US trade wars, China's border entanglement with India, two largest markets and manufacturing hubs. All of this essentially leads to volatility to the world's major currencies and questions the stability of current financial instruments. It brings on the need for new class of assets. And I believe digital assets have an answer there. It also brings in a need for proof of authenticity and chain of custody of medicines and vaccine. Imagine by the end of the year, hopefully, we come out with a vaccine for COVID-19 that needs to be distributed across the world. And the problem of authenticity of vaccines and medicine is further exacerbated with the demand and need in this day and age. So blockchain can help solve that problem. Here's another interesting problem that blockchain can help solve. Imagine that each one of us consumers had a digital wallet where we could connect directly with the federal or central government in the country that we live in. So if the government wanted to distribute any stimulus dollars or any cash incentives, they could directly infuse that into our digital wallets rather than going through banks and financial intermediaries. That would make a big difference. Although still consumer privacy needs to be addressed before that can be a reality. So to me, as we inch towards a post-pandemic era, I believe now is the time to build state-of-art products, resilient infrastructure, and innovative companies and emerge out as a better society. I believe blockchain has a central, in fact, a driving role shaping that world. We'll explore how to do that in more detail in my upcoming book, Profits in Chaos, blockchain strategy to solve and survive disruption. And as Mr. Spock would say, live long and prosper. Thank you.